Thank you for being here. Appreciate you taking the time.
Of course, I appreciate the invite. Yeah, it's really cool to be a part of it.
So let me ask you, Scott, what's going on today? I think, did you go on an IBD live today?
I did. Yeah, I just got off, which is why I'm dressed appropriately for your show. Got a collar and everything. Yeah.
Yeah. Any insights, or what the thoughts are as far as what's going on today, what everybody's seeing, and then your thoughts about the market in general? We're just talking about the market here, and
Oh, okay.
seeing really a lack of a lot of setups lately, not much really working and following through. A lot of stocks sort of try to break out and then squat and pull back. So a lot of volatility around breakouts, making it difficult. Mark and I were just talking about how, we'll take smaller test positions and sort of put our toe in the water, and then until trades are actually working and giving us that feedback that our ideas are actually being rewarded in the marketplace, we ride the brake, and we act, as I always say, I'm the caboose and the market's the engine. O'Neill might have said that. I might have stole that from him, but that's it also includes intraday. Bought a couple stocks here. We took a small position in ALNY as it started to move up here, but once again, just like every one of these plays that have been happening lately, pulling back here. Hopefully it's going to hold up. ADM's another one. We took a little position in ADM as it started to turn up here through this little tight area, but just not getting any traction really in anything at this point. Are you seeing the same? What's your feeling as far as what's going on?
I couldn't agree more. I feel like I can find stocks to go up. I just can't find stocks that stay up. So they last for hours, sometimes a day or two, but nothing is trending. I haven't yet to find a stock. I can't remember the last stock I was able to hold for weeks and weeks. So it's a difficult environment. I feel like big cap tech stocks are under distribution. The institutions, they want out. But there's nobody on the other side. I don't know who's left to buy the Apples, the Googles, the Teslas of the world. So, and those companies influence the indexes, obviously, due to the weighting. So they're putting a lot of pressure on the market.
What Scott just said is so important. He said you can find stocks that go up but don't stay up. And that is actually the most dangerous environment that you can possibly trade in when you're a low risk trader that uses stop losses, because that is the whipsaw environment where you get sucked in, you get knocked out, and you get death by 1,000 cuts. And that's a much more dangerous environment than if the market's just going down and everything's collapsing. People think that's like, a lot of times, my friends, if the market get flash crashes and big down days, I'll see a friend of mine and they'll be like, "Whoa, boy, you having a bad day today? Did you get, crushed?" I'm like, "No, like those are the days where I'm just out, there's nothing to buy." It's the days like, today where you get something that sets up, breaks out, and then turns around, pulls back, and maybe stops you out. And you're at a loss now, and you get a few of those. If that keeps happening, that's where you rack up the losses. And that's sort of the trade-off. That's the trade-off from, having those small losses and taking those small. There's a cost. You're going to be knocked out more often. You're going to be whipped around a bit more. And that's why this progressive exposure concept is so important, that you don't just go barreling in, that you have to make sure that you're not in that whipsaw environment. And this goes back to Mark Ritchie, where he's saying that this isn't like, even if you have a 50-50 batting average, it's not like it goes win, loss, win, loss, win, loss, and has that equal distribution. These situations trend, they come in bunches, and sometimes the bunches are huge. You could go months and months with just trade after trade after trade not working. And it will frustrate the crap out of people, if they don't understand that this is normal. And part of trading is staying out. It's the biggest part, actually. When that's the most important decision, is when to do nothing, or to be very light in the market. Let's see here. Why don't we? So Scott, we just go off the cuff here, on this day here, and even with Market Smith going over markets. We went over just some screens and some general concepts of how we screen. We tend to, Mark and I run pretty wide. We cast wide nets. We want to kind of see everything. I was telling everyone that, if you set a screen and you put too many parameters in it, you try to make this perfect screen and you put 100 parameters in it. If it misses on one and it makes it on 99, you don't see the stock. So I sort of try to cast a wider net. What we've done in the past, and Arusha was great at this, of showing us, sort of doing a tutorial on MarketSmith. I've learned things every year. I've learned something new about how to use it. And I've been using the product for 30 years in one form or another. However you want to, go over a MarketSmith is fine with me. I can display anything, and when you can share your screen too. If you have any presentation, if you want to share your screen, feel free, and we can go over some MarketSmith and go over the product, because I'd like everyone to see why it's so unique and so powerful.
Okay, let me pull up mine. My
And again,
MarketSmith.
we don't get paid to use MarketSmith. We've sort of, MarketSmith and IBD have come together over the years. MarketSmith and IBD have never sponsored another event outside their own events. They've had their own workshops. I'm the only event that they've ever been willing to put their name on that wasn't one of their own, and vice versa. We've never had another sponsor. So we've never allowed anybody to, and we've had lots and lots of people want to sponsor us, but we never did, because MarketSmith is truly something that I've used, become part of my fabric of my trading. Prior to MarketSmith, it was Daily Graphs Online. Prior to Daily Graphs Online, it was Daily Graphs to printed books. And I go all the way back to the 1980s and 90s of using Daily Graphs books, then online, then MarketSmith. So I have a long history of using this product. And as Mark said, we don't want to endorse anything that we don't use and know ourselves. But again, we're not paid endorsers here, just so you know. So how do you want to do it, Scott? You want to show your screen, or you want to?
Sure.
Yeah.
Let me
Is he enabled to share, Bob?
I think I am. I do see that option.
I think I have. Yeah.
You have to stop sharing, and then he can share his screen.
It says this will stop other share screening. Do you wish to continue?
Yeah, go ahead.
Okay. So yes. All right. Let me pick the right monitor here. Sorry, I have too many monitors.
Sure.
Screen 2. Okay. Do you guys see a chart with a red X in there?
Yep.
Okay.
You raise your hand, everybody, just to let us know that you are seeing Scott's screen. Okay. Plenty of hands being raised.
Awesome.
Okay, great. All right. So I imagine you did show people where to find. Let's start with your stuff, Mark. The templates down below in the reports.
Yep.
Okay. Let me pull this up so you can see a little bit better. But it can be, if you have MarketSmith, it can be hidden a little bit because it's stacked inside these folders. So you have a stocks folder, which you'd need to open, and then you'd have to open the technical folder. And if you scroll down, you'll see the 1 month, the 1 to 4, the 5 month, and then the 5 month wide. Did you discuss kind of the differences in those, Mark?
Just the 1 month to the 5 month. The 1 to 4 is in between what it says, 1 to 4 month, and that's sort of looking at a narrow slice. But the wide, we took out the relative strength rating, so you can, if you want to put a lower RS, you could put a lower RS rating in it. So it just gives you some flexibility.
And right now, probably because of the way the market is, they're very close. You have 215 in the 5 month, and you have 244 in the wide. You can see the number of stocks. But you're right. The wide does not have that RS rating filter that the original one did. I think it's a filter of at least 70, but I could be wrong if I sort this list.
Yeah.
You'll see in the original one that Mark and Arusha built together, the RS rating, the lowest RS rating is an 88. So the wide allows lower RS rating stocks if you want to, cast a wider net, like Mark mentioned.
Also, I pointed out, Scott, up in the open stock ideas up in the right, there is a shortcut to it.
Correct.
Yeah. You go to weekly.
So it's in the
Go to weekly.
the weekly review, and And we need to, I wish this was bigger, this box, because some people don't see the scroll, but you just have to
Yeah,
scroll down a little
exactly.
bit.
And then
there
when you
it
click
just
on that, it actually
jumps you there.
it takes you to that one, but it also takes you where the other ones actually populate. So it's kind of nice to get there quick.
Yeah, if you don't have all of those open, it would have done the 5 steps that I did to open them. It does it in one fell swoop.
Scott, the other thing too, as I was pointing out, is that you can either screen from the entire, you can use this as a qualifier and then build a screen, and you can screen from the whole entire MarketSmith database, which is 90 some 100 stocks, or you can screen and use this as the qualifier from that database. So that was another thing I pointed out.
Great, cool, yeah. So if you create a new stock screen, you can originally, when you first create it, it's going to screen from the database. You can see it says MarketSmith database, 9,697 stocks. Of that, roughly, it's about 5,000 stocks. The rest are ETF/closed-end funds. But if you wanted to change that universe, you can click on it, and then you've got these stacked folders like I talked about, technical. And then I can tell MarketSmith, I just want to screen Mark Minervini's 5-month wide list. So I'm going to click on that. And now instead of searching the 9,697, you're going to search the 244.
And you need to put some criteria in to have something come up. It won't show
Correct.
anything if you put one piece of criteria.
Yeah, all of these dull orange categories have options you can choose from. Price and volume, for example, has 36 items. So let's just see which one is up. If I were to say price today, price percentage change current day, let's see 5% is my minimum. So of the 244 stocks, there's one that's up 5%. See, and it gives you feedback too. I can see, well, that's pretty tight, my screen. It's probably too tight. Let's go ahead and change that from 5 to 1. And now there are 30 stocks that are up at least 1% today, and you can see them populate down below in the list panel.
Right, and you can see DGII there. You can see AZO, a bunch of names that came from my list, my focus list today. So those are stocks that are going to be in that stage 2 uptrend, in an uptrend. And now you can overlay criteria on there. But now you're starting from that database of being an uptrend. So now you won't be tempted to maybe buy those stocks. Times people show me a stock and they'll say, what do you think of this? I don't even see those stocks because I'm not screening. Those will never make it through my filter. So I don't even see those names. I'm not even tempted to buy the falling knives and the stocks that are in downtrends and so forth.
Exactly. You're starting from a much cleaner universe of potential ideas, right? And so,
right.
But you could, this would be like a daily screen, so to speak, something you could do during the day when the market's open. If you wanted something more of a research related, you could say, I want the stocks to be within, 20% of new high, or I want the stock to have been up at least 12% in the last 3 months, and so on and so forth. There's a million ways to slice this, which is like what you mentioned.
Yeah.
I'm going to turn off that figure. So in the last 3 months, there are 101 stocks that are up at least 12% or more in that list, things like that.
Yeah.
And like
if you
Mark
want to
said,
show your own, if you want to show whatever you want to show features,
sure.
feel free.
Yeah, what you said about the screening is very important. So unfortunately, it would be cool if we had a screener that said, these are the 10 items that I love to look at. Give me the stocks that meet 7 of the 10 criteria. We don't have the logic for that. So the screener is very all or none. So you want to segment your screen. So if I'm looking for IPOs, I just create a screen based on IPOs, like Mark said. Or if I'm looking for stocks with big sales, I think I heard Mark Cuban on a TED Talk or a podcast or something where he talked about sales being a big thing. So I was like, oh, okay, let me just build a screen based on what he says and just see what shows up. So, I experiment a lot with this just to try to get an idea on what the market is, pushing out as far as potential ideas.
Yeah.
If you want to, now that's the custom screen. If you want us to do the work for you, then what Mark mentioned, the open stock idea is, this is your best bet. This is the table of contents for all the best screens and reports that that we find most of our clients are using. So you've got breaking out today, stocks that are near a pivot based on the algorithm that we have, the pattern rec algorithm, stocks that have broken out in the last 3 weeks or less based on that same algorithm. RS line blue dot. So relative strength's a big deal, I imagine, to most of you. Stocks where the RS line is at or new high, and the stock is, I have my pattern rec off, so bear with me, I'll turn it on. So this blue dot is telling me that the relative strength is at 52-week highs, and the stock is either in a base or recently breaking out of a base, as in recently meaning this week. So here's Ashland, very close to the top of the space, and the relative strength line is at all-time highs, 52-week highs.
And I love the blue dot to run that in a bear market. That's a screen that you should always run in a bear market. RS line near new high, and this narrows it down a bit more, looking at the stock price in a base and near a new high. So this is one that where the leaders, it's almost impossible for the really the best names and the leading stocks to get by you if you run this in a bear market, because they're the ones that, while the market's in a downtrend, they're holding up. They're building bases. The RS line is moving up, because even if the stock doesn't go up, if it goes down less than the market, that's going to improve the relative strength. So this is a key screen to run. Scott, also something that I love that you guys have added is you can put RS line near a new high with a certain percentage now.
So that would be
a little heads up.
A screener item. Yep. So if you want to get ahead of the curve, like you said, yeah, you could say, if I go to, let's open this and go to price and volume. And so you've got relative strength line is within 5% of a new high. So you just choose yes in this case. So you've got RS line new high, yes or no, if you or new low. If you're interested in shorting, you could do that. But you just choose yes in this case. And let's turn off the other parameter. But within the 5-month wide, there are 78 stocks where the RS line is within 5% of the new high. Of its new high, the RS line's new high, not the stock price.
Yeah, I call that my orange dot screen. Got the blue dot, that's orange dot.
I like it. Yeah, though the blue dot has 2 parameters, right? You've got the RS line, but you also have to have a base as identified by the algorithm. That's
Right.
Both good and bad, right? And maybe you don't like the base. Maybe there's an earlier entry that you might use.
Sure.
And the algorithm doesn't see that earlier entry, so that's why I think you want to do both. You got the blue dot, and you have either a screen like this, or down below, we have a list called all RS line new high. So every Friday, it's just going to screen the database for all the stocks where the RS line is at new high ground, and just give you a list, regardless of the pattern, regardless of the fundamentals, the technicals. All it's looking for is a relative strength line at new high, yes or no, and it creates this list for you. You can see there are 351 items. It's sorted by event date. So the most relevant names to you would be on top. As you scroll down this list and do your work, it's going to become more of a history book, so to speak, of previous RS line new highs, which is fine, but just keep that in mind. And the names will stay in this list for 45 days. So after 45 days, they'll fall off. Unless the RS line is still a new high, then it can stay in there.
And I should point out that when you take something like a screen like this and you build the trend template, my trend template in there, and you're using RS lines in new high or near new highs, if you went back and you ran this and you looked at when Amazon came out of its bases, and when Netflix, and when Google, and when all these big leaders, that some of the best stocks ever, they all would have came up on this screen. You're not going to miss the leaders. You're definitely going to see the stocks in the uptrends, because all of those stocks bottom, the best stocks bottom before the market. So you'll see the market will be in a bear market, and the best names are already in uptrends. So this will pick that up. And that's why it's important to run this, particularly when you're in a correction or a big bear market.
And Mark, a common question we get, I get emails all the time because you have so many people across the globe. We are U.S. listed equities only. We do have ADRs, but it has to be, you know, BABA, Pinduoduo is in Marcus Smith, but it's all U.S. listed stocks only. We don't have any foreign exchanges, unfortunately. And a question somebody asked about the RS rating. Our RS rating's a little different than most people. It's not like an RSI, like an overbought, oversold. It's more, it's measuring relative to our entire database. So the best way to think about the 89 for Ashland in the last 12 months, and it's not a perfect trailing 12 months. There is some proprietary nature to it. It does weight the current environment more. The 3-month and the 6-month performance is weighted. But as a general rule, in the last 12 months, Ashland has outperformed 89% of the stocks in our database. That's what an 89 would be.
Just to let you guys know too, I stopped out of the ALNY. Just like we said, we're looking at the intraday as sort of as the daily, and the daily as the weekly, sort of an exercise. We did take out that low, and we're breaking down here. We didn't get that support. We had 1, 2, 3, 4, 5, 6 lower lows, a dead cat bounce. I know the charts I'm not sharing right now, but I could show you later.
Yeah. Do you want to switch?
No,
do you
that's fine.
Okay.
It's okay. No, keep going. I just wanted to point that out and just let you know that I did stop out of that. So I got knocked out of that trade.
Okay. And
Still in the
somebody asked,
ADM.
I'm sorry, Mark.
Go ahead.
Somebody asked about comparing the stock to the S&P. Well, we do that for you automatically with this relative strength line. So I'll pull up Apple, and bear with me. I have 2 relative strength lines on there. So let me take one off to make it cleaner.
And it's important to point out that another change that you guys made is that you can have you can compare it to the NASDAQ or the Russell too.
Correct. You can compare it to, you could compare every stock you want to Tesla if you wanted. I mean, you can
Right.
choose anything, but this line is the Apple's performance versus the S&P. So in essence, Apple is outperforming the S&P, or let me choose something that's a little bit easier to see. So here's Tesla going up, outperforming the S&P, going down, underperforming the S&P. And even if the S&P was going down, if Tesla's going down more than the S&P, that line will be, you know, turning and pointing down. So that's what that relative strength line is.
Yeah, and you can see Tesla is turning into a textbook example of stage 2, stage 3, stage 4. You're turning down to stage 4. It got very toppy there. Took a long time for that top to form, but now you've rolled over. You've taken out those lows. The 200-day is in a downtrend. You're getting into that stage 4 decline now.
John asked about, he noticed on your screen and mine that we have, well, I have like gross margin here for Tesla. And he has dividend PE. So this is something you can customize. So John, you would want to click on the wrench in the upper right corner, and in the drop-down menu, do you see the quarterly data blocks? This is the standard dividend PE range, but you can change it after tax, pre-tax, gross margin, return on equity. So if I just click on pre-tax margin, for example, now you'll see the pre-tax margin below the quarterly earnings and sales data block. Yep, of course. Thank you. Somebody asked about the price, the scale, the logarithmic versus arithmetic. We just have a standard for the daily. You can adjust a weekly chart if needed. So right now on my weekly chart for Tesla, I am on price scale standard because it tells me best fit. Yeah. If I wanted to see this price action that's kind of off the chart, then I can tell Marcus Smith, fit the prices to the chart. and now it's going to scrunch it all there so it fits. And it lost its mind with the pattern rec when it did that, but you get the idea. So we only have those standards. You can't adjust them how you prefer to do it. For what it's worth, I prefer the standard view. I think the standard is the best way to look at them, but you can play with it and see how it looks for you. Somebody asked about adding moving averages. So that, again, we're going to be in the wrench, click on the wrench and choose moving averages. Marcus Smith has, let's talk daily chart, a 50 and a 200 day are automatic on the chart. You cannot adjust those. You cannot remove them. They're just there. So there's the 200, which is black. There's the 50, which is red. But you can add two custom time moving averages, I should say, to the 3 different time periods. So here's the daily option. Here's the weekly option. Here's the monthly option. So if I wanted I've got the 21 day, but let's scroll. If you see, you got the scroll wheel. If you wanted the 28-day moving average, whatever you did a study, that's the magic number, great. You want it to be exponential, no problem. You just hit apply changes. And now the green line is that 28-day exponential moving average that I just added.
Scott, one of the things that it's a very simple way to use Market Smith, but I find it to be one of the most powerful, is that when you run a screen, if we can go back to screening, and if you cast the net wide, like I said, let's just say you look at all the stocks that are in the trend template that are in uptrend, which right now in this market, there's not very many. It's a couple hundred. When the market's in a strong uptrend, a bull market, I've seen that up 900, 1,000 names. But what I like to do is set up my headings. So you've got the composite rating, RS, and then from there, just sort. The sorting function to me is one of the most powerful tools. I just want to look at everything in an uptrend, and then I can sort in relative strength. And then I look at them from RS, from top RS down. If I'm looking for stocks that I want good fundamentals, I just sort in SMR rating. If I want to I can sort in composite rating, and that takes in account the group and everything. And you're going to probably see solar names in there, and the oil names, the stocks that are acting the best. So the sorting function, even right down to the IPOs, where I just sort in IPO date. So then I get the ones that are the shortest and the most recent. And then as I'm screening, it elongates. I hit the space bar and I scroll my way down. So I just find that the sorting function, if you cast your net wide and then use the sorting, it's very powerful just in that alone, just a very simple way to apply it.
I agree. If you get a big list, let's say you do a screen and there's 600 names in there, it might seem daunting to you. And so by sorting it, in this case, I sorted by the comp rating, brought all the 99s to the top. And if I just double click the very first stock, which is AIT, I'm going to close the screener here by just hitting this tab. And then I will hide this list panel. That way I get better real estate on my chart. So I'm going to hide it with this mini icon. And now I'm starting with all the 99s. And every time I hit my space bar, I move to the next 99 and eventually 98, so on and so forth. At some point, you might say, this is just not fruitful. I don't like the setups. I don't like the quality of the names. And you can just, stop and move on to your next screen or report.
Yeah.
And you can do a double sort, Jay asked. Sure. Yep, for sure, Jay. So
yeah.
The sorting is like a tiebreaker. So if I were to sort by market cap, it wouldn't make sense to do a second sort because all these numbers are so random and there's not going to be any tiebreakers. But with the proprietary ratings, especially if you have a quality list, there could be a lot of ties. Like I just scroll down, I can see there might be 30 99s. And so what it does, it's auto sorting the 99s based on alphabetical order. I'm going to click on this little yellow padlock. It's very subtle. You might not see it that well, but if you click inside that padlock, it'll lock it. And now I'm going to tell Marcus that I want a secondary sort. I want what I like to call a tiebreaker. So let's choose EPS rating, for example. So are there any 99 99s? Yes. There's 2, 4, 6, 7 of them. So now it's a much better list as far as quality. 99.99 at the top, 99.98, 99.97, and so on and so forth as you work your way down.
And you can do that with 3. You could add another one if you want to add SMR. And the good thing about that is, so now you're going to see 99.99s, then you're going to see 99.98s. So the reason why this is a good thing to do is because you want to prioritize the best performing names, the names that have the criteria and are showing the leadership profile, the criteria that is consistent with a leading stock. And so that's why I like to screen from the strongest to the weakest, and then scroll in that direction, prioritize on my work the stocks I'm always favoring the stocks that are acting the best.
And when you do that, when you scroll through, Doug asked about, split screen. So I can't split screen the single monitor, but if you have a dual monitor system, like probably most of us do, like you look behind Bob, you can see all those screens. You can put a daily, a weekly, a monthly, an intraday right next to each other. And so you click on this little chart right there. It's a tiny little chart. It's called a new chart window. So if I click on that, you'll see that now I've got 2 charts, and I'm going to make this one the weekly chart. So I've got my main Marcus Smith chart is a daily. I want the next one to be a weekly, and you could rinse and repeat. You want a monthly, you want an intraday. You want to tell Marcus Smith to talk to each other. So let's tell it receive symbols from main chart with this button. And you can't see my screen because, you can only share one in Zoom, but I'm going to move the weekly over to the right. And now as I spacebar through the list, I go to Vertex Daily, and automatically you can see it's changed that other chart to a Vertex Weekly. Huge time saver, especially if you look at 500-600 charts a day, or a weekend. And if you like to look at more than one time frame, think about all the clicks that you'll save by doing that. So I would guess most of you have a dual monitor system. If you don't have one, and I probably would suggest you get one. It's a huge time saver in that regard for the different time frames.
You can also organize this on the iPad. Is actually really nice. On the iPad, you can split it, and and they actually puts all the charts stacked, so you can scroll through them, and you can even I think you could put 3, right? You could put a monthly, weekly, and a daily, which is really nice. So the iPad has a function that's really great. I use it. I have the large iPad, and I'll sometimes, when I want to, on a Sunday when I'm watching football, I'll sit there and scroll through on the iPad.
Yeah, the iPad can do in one screen what the browser can't, unfortunately, at least at this point. Maybe in a future upgrade we can get the browser to do that. But and it's gonna scrunch your chart a little bit. But if you just kind of want to review a bunch of stocks, it's a cool way. Okay, Chris. Yeah, sure, Chris. For the split screen thing, I apologize if I went too fast. If it's this little chart window right up here, if you hover your mouse over it, there's a bunch of icons up here, but it'll say new chart window. So you just click on it. You tell it the time frame. It's like a normal chart, pretty much. You just tell it the time frame you want. I want this one to be a monthly, or I want it to be an intraday. And you just, if you want them to talk to each other, that way you don't have to change the symbol each time, which makes total sense. Click on this button that says receive symbols from main chart. Oops, and I dragged it too quick, but then you just drag it to where you want it. And now when you're space barring through the list, Mark Smith is changing all the open charts you have. The stochastics, I'll defer to you, Mark. I don't use the stochastics, so you can say yes or no, or yay and nay on this, but I'll tell you how to add it. So in the upper corner, you've got the wrench. In the drop-down menu is stochastics, and it's going to create the stochastics above the chart. Take it away, because I just have, I've seen it for 20 some years, and I've just decided it's just too squiggly for me.
Yeah, I've never used stochastics,
okay, good,
or MACD or any of that stuff for individual chart analysis of a stock. So I would, if doing what I do, I would stay away from it. And I know O'Neill would never use stochastics. But again, the charting programs are designed so there's people using this. There's investors out there that are value investors and are buying stocks that are down and oversold, and Marcus Smith is valuable for them too, even though it's been built around the O'Neill and the CanSlim criteria. It's really geared towards, but it is certainly flexible enough to be used for other applications as well, the strategies as well.
Yeah. So we don't have like MACDs or Bollinger Bands. And the reason is, like what Marcus said, this product was geared towards the William O'Neill investing style many moons ago. And it's kind of stayed that way in a kind of a legacy version. Now, we would like to add stuff that way. I think in a perfect world, we give you everything and allow you to say yay or nay. So the stochastics is a nay for me. I just turn it off. But some people, they ask about it, they like it, and so at least you have that option. So yeah, and eventually we'll add things like that, but mostly it's clean. The chart is designed the way Bill preferred it to be, and we've kind of stayed the course through all the years that way.
Yep.
Can I create a screen? Good question. So somebody asked if I create this screen based on Mark's 5-month wide list, for example, fast forward 6 months from now, the 5-month wide list is going to be different, right? It will update automatically. So every Friday, this list changes. Maybe it's very subtle from week to week, but it will change. So in 6 months, if there's 500 stocks in the 5-month wide, your universe at that time will be all those 500 stocks. You don't have to do this each time.
I think, Scott, I'm not sure. I think I think it was weekly updated at one time, and I was trying to get it to be updated in real time or daily. I'm not sure. Is that still weekly?
It is, yeah.
No?
Every Friday after the close,
Gotcha.
give or take a few hours, the list will change.
Gotcha. That's the only drawback, is that intra-week you do, and that's one of the reasons why, even with my own screening, when I showed you some of the screens that I use, when I just look at the high RS names that are off the highs by a certain percentage, and even if I don't put in that criteria and use my own trend template, I'm seeing everything. I'm going to see everything that's in an uptrend, and there might be a few stocks that don't meet some of the criteria, but 99% of everything I'm going to see. But I'm able to do that daily because I do screen on a daily basis.
And so, if from a resource standpoint of programming hours, it would be cool. That would be one of the many things that I would like to add, is just to be able to make that more real time and things like that. So
yeah,
it's something that we probably will have, but yeah, as we sit here now, it's only changing once a week.
And maybe on your weekend work, when you do my big screenings on my weekends, and that's where I do I run a bunch of screenings. I sort of do my big screening, and then I do lighter screening throughout the week, sort of on the backs of those results. So maybe you could use that on your weekend work, and then as you go throughout the week, you have some utility screens.
Agreed. I think that's the best way to attack this, is a very thorough, strong weekend routine. And then depending on, some of us have day jobs, and it might be hard to do screening and research on a Tuesday afternoon or a Tuesday morning. Yeah. But if you have that strong foundation, you've prepared yourself with that weekend work, then you're ready. And then if you can, and like you guys that trade for a living, so to speak, you can, you have those other things you can use to search for ideas.
Yeah. Anything else as far as Market Smith? Now, I don't even know if I'm not prepared really for this, so I don't want to say something and put your foot in your mouth. But I don't know. I think you might have a special offer for attendees, right?
Yeah. So
okay.
If you're new, if you've never taken Marcus Smith before, then we'll give you 15 months of service instead of the usual 12 on the annual. So the price is $14.99 a year. Some of you, it depends on where you're located, whether it's state tax or if you're in Europe, you'll be subject to the VAT, the value added tax. There is a tax. I want to make sure everyone knows it's $14.99 plus tax, but we do offer 15 months instead of the usual 12. If you